Welcome back. Today is the 6th of August. We'll break down current market narrative, reviews today's price action, and map out the key areas in which I'm looking for the next session. Let's get into it. So we'll start off with the daily time frame on the Nasdaq. After a 4-day bullish run, yesterday was the first bearish candle, and coming into today, our key levels were, of course, previous day high, previous day low, and we had this daily inefficiency, which I've done the upper quadrant and the lower quadrant and the fair value gap. Now, my main focus is just after 9:30. I'm not really focused on what occurred during Asia session or the London session. If we look at that on the 5-minute time frame, it pretty much accumulated, slightly going lower. However, we did take out previous day low in the Asia session. In the Asia session, I do want to note that when a key level like previous day low or previous day high gets taken pre-market, after the market opens 9:30, the market tends to return back to that level, and that's what occurred today. I want to focus on ES for a second. If we drop down to the 4-hour time frame on ES, I want to focus here. We had buy side liquidity, which was resting here, and we also had previous day low here. Go down further to the 1-hour time frame, and we can see it was pretty much accumulating, and it's been a lot more bearish than the Nasdaq. But let's run through what occurred at 9:30. This right here is the 9:30 candle. We swept previous day low, and the moment that swept previous day low, NQ pushed price low as well. Now, yes, you could say there was some sort of key level which I've potentially missed, but this is where I use things that are not in the chart to my advantage, such as looking at the S&P 500. The S&P 500 took previous day low at 9:30, and then price rejected from there. You can see this 5-minute candle was a rejection candle, and from there the market pushed higher. Okay, and the target on here was now once ES took previous day low, the question is, how do we get an entry? I normally would go down to the 15 seconds. You can see the 1 minute, but as I mentioned yesterday, I like my time frame alignment. The entry I took was very high risk, and this is only because of discretion, and this is only because of experience that I'm able to take these kind of trades, where I can see that this fair value gap right here was inversed, and then we created an order block right here. Essentially, we get a close below here, market then displaces higher, comes back into this volume imbalance, and then rejects straight away. So you could essentially, your entry should be around this level. So this was around my entry here. Then we can see price started pushing higher. Okay. The next key level we had marked was London low. Okay, if I go into the 5-minute time frame, you'll see London low right here. Okay, and I want to go back down to the 15 second, and this is how I form bias. I look at key levels and I see how is the market reacting in that certain level. And in this scenario, we can see that we created a massive CISD right here. We can get a tap back in right over here, but in these situations, such low time frames, this could be just a manipulation. Okay, we could come back down to the swing low. How do we know, and when can we tell for sure that the market is pushing higher? And we can see over here, the market created a massive displacement, tapping into this gap here, and then once it did, we got a tap back in to this 15-second gap at the London low. Okay, so it's very, very intricate. You wait for a key level, you see how market's reacting at that level. Are we showing signs of reversals? Are we showing signs of momentum? Okay. And in our case, we were seeing signs of momentum back into the direction where we're heading. Okay. And we also had a key level that the market wanted to target, which was the buy side liquidity. Okay. So London low essentially was taken. And when I mean taken, it was re-mitigated. We created on the smaller time frame a CIST with a 15-second gap. From there onwards, we had bullish order flow. The market started pushing higher. And again, same again here, we had accumulation. This line right here is previous day low. Okay, so you can see that the market was creating some sort of support and accumulation at this level, but then eventually it broke through. The moment it broke through, we can see right here, we tap this high and bounce back again using support and resistance to our understanding. Okay, so this all looks easy in hindsight, but I'm able to call this live while the market is printing. And this is just me showing what I'm looking at on a day-to-day basis. But this is how I'm looking at price while the candles are printing. So let's go back onto the 5 minutes so we can see a clear identification of where price is at. So now we're in this buy position. We can see we've come to previous day low, which I've marked, and we're remitigating this level. Okay, I'm going to reuse that word, remitigating it, because we've not taken it for the first time. It's been used as a liquidity level, and we can see we've created some accumulation. Now on the 5 minute, we can see we've tapped back into this 5 minute gap and creating a 5 minute internal to external trade. I think this was also at macro time, so just at the new 4-hour candle. Pretty clean if you ask me, and if you can get a good stop loss, I would say you could have targeted at least the quadrants of this rejection block or buy side itself. But notice how we take this upper quadrant and then we come back down to this order block. Okay, I'll go on to the 4-hour time frame because these are where I've marked out these levels. So this right here is the rejection block I've marked out. And then on the hourly, I think it's the 4-hour still. Yeah, it's the 4-hour. And we have this order block right here marked out. So I've marked out the upper quadrants and the lower quadrants on the 4-hour order block and this rejection block. So I'm deriving my levels and I'm seeing price react at certain levels every step as we go. So it's not just random. I'm seeing the price moving to one level to another level. We can see how we came to this level, moved into this level, then came back within that level, and then again we drop down here. It's like a ladder, okay? Where it's an intricate ladder where market is moving one place to another all throughout my levels. We can see that from the previous day high all the way there, and then eventually hitting target of buy side liquidity. Okay, this reversal is probably one of the best A+ setups you can get because we have failure swing highs, and just right here before we take buy side liquidity, we get a turtle soup. We come back in. We can see right here about 11:30. We can come back and target sell side. Expected as it was Thursday, the market is going to start slowing down at certain times once the target has been met. The target for buy side had been met for the day. The market did not need to do anything else. As you can see, after the market was purely accumulating. And yes, you can say on the 5 second and 1 second is probably algorithmic trades, using certain levels. But if you want to keep it to the highest probability setup, and if you don't know how to trade the lower time frames, such as the 5 seconds and the 1 second, it's best to turn off the screen, especially after this buy side was taken. Okay, so recapping on what I saw and what I said, we had ES taking previous day low, and we had formed a reversal on the Nasdaq, and From there, we used two key levels. We had London low and also previous day low, which was remitigated to potentially push price higher to our buy side liquidity. The market formed as a AMD system. Okay, AMD is accumulation, manipulation, and distribution, where the market accumulates for a certain amount of time, manipulates lower, brings in the sellers in, and then distributes back into the right direction, targeting the buy side liquidity. So overall, once you've refined your system, once you've refined your strategy, it's about risk management, it's about maturity, and a lot of times experience. Now, I'll say this multiple times over and over because you could be right 99 times out of 100, but that one time, because you've not used that correct risk management and you don't have the right psychology, you can ruin all your good work. Okay, so that's all it is from me today. Have a good evening and speak to you tomorrow.